Hey, my name is James Nicholson and welcome to my YouTube channel. Now, this channel is all about my property investing journey. We're currently building a portfolio for myself and my two girls, Amelie and Georgia. So while you're here, take that finger of power, smash that subscribe button over there and hit the bell notification. Now, I'm obviously not in the office. I'm at home. I've been watching the American news and interest rates have gone up in America, which was kind of expected. There was a consideration, and Jerome Powell even mentioned this, that they considered pausing the interest rate rises this month because of the banking issues that they've had with Silicon Valley Bank and various other banks that have had to be bailed out over the last few days. But inflation is still pretty high. America has inflation of 6%. I only wish we had that at 6% ourselves, but theirs is sitting at 6% now. And so they've gone up to 5% interest rates. It was a quarter of a point rise. Now, what was interesting in the press conference afterwards is they're kind of indicating, same as the Bank of England did last month, that we're pretty much at the peak of the interest rates, but they don't rule out whatever is needed to be done to bring down inflation and make sure we get back on track. That's their number one priority. But they did indicate, they can't say definitely, that interest rates have more likely peaked. Now, one thing that they did also say is that they may not bring down rates this year, in America at least, unless anything really changes. So they're going to see and judge it each month, see how everything's going. But they're not looking to do that. Again, they reiterated things like that the banks are safe and solid over there, which they've got to do because they don't want to have to keep bailing out lots of banks, because some of these banks would be fine if they didn't have bank runs on them. They don't need to. They've got fairly good fundamentals, but obviously if everyone wants their money at the same time, it doesn't work. So that's something that they just kept reiterating, that the banking system's fine. They're going to do whatever is needed to make sure that that works. Now, one thing that I found in there that was interesting to property investors, because obviously that's what we're talking about here, is that they feel liquidity will drop. And so there'll be less money available for mortgages, for loans, and that's going to hit a lot of businesses. And so they feel that because of this interest rate rise, that banks are less likely to lend money to small businesses. That means small businesses will have less growth, or maybe less opportunities to fund themselves. That means maybe less staff. And that's kind of what the Fed wants to happen. They want us to slow down as an economy, not to grow. They want us to be hit that little bit harder and bring this inflation down and get that under control. But they're trying to do it in a way that doesn't impact as many people as it might. Now, the markets, though, are predicting that there will be interest rate decreases. That's what they've priced in since this announcement, that there will be some interest rate drops by the end of the year. Now, obviously, the Federal Reserve can't say, look, we're going to drop the price, we're going to drop the interest rates in September, for example, because it wouldn't have the impact that they're trying to achieve by raising the interest rates. They need to actually cause a little bit more pain and see if that pushes down that inflation that little bit more. They think inflation is going to hang around in America a little bit longer than they'd hoped, which was what obviously a lot of people are saying. Looks like UK inflation as well. We did a video on that earlier today. That's gone up. That's down to mostly food costs and stuff like that. But all of them, the Fed, the Bank of England, they're all still saying that they still think inflation is going to fall off a cliff come summer. So we'll see. I don't know. But the one thing that I did say, which I did think was interesting, is the drying up of the liquidity. That could cause problems for investors. So if I'm working on a deal or a project, I'll make sure that you've got options for your funding. Don't just rely on one source. Look at doing JV deals, look at doing bridging, but make sure you've got multiple funding options. The worst thing you could do is to go into a deal and not be able to get off that deal and move on to something else. But what do you think? Clearly, it indicates that we're going to have an interest rate rise in the UK tomorrow. We'll make a video on that, so subscribe and hit the bell, and we'll go through what that means for us, and we'll see how that impacts us as property investors. But yeah, that's likely to happen. We kind of know that now. I don't think it was necessarily on the cards if the inflation, hadn't gone up so much, but it did. So that's what it is. So that's how it all is. So let me know your thoughts. Do quickly like this video, guys. That really helps with the YouTube algorithm. And look, we've got a guide in here in the comments about how to invest in property, what you can be doing in this scenario to make money in property. So go and grab a copy of that guide. And while you're here, check out this video right here.